Hi, Denise Naylor here, and welcome to my video, What is a Mortgage? Part 1, some definitions. Quick disclaimer, all my videos are education, not financial advice. What is a mortgage? Morium vardiem, the Latin root meaning a dead pledge, literally. Latin terms are used in legal and business contracts throughout the English-speaking world. The use of Latin makes your meaning understood regardless of what colloquial language you're speaking in. Now, if you've heard the expression a dead cert, you'll know it means something you can rely on, something that will definitely happen, a promise, a bond, a guarantee, a commitment, a word of honour, a pledge you can rely on. In the UK property law, a mortgage means a conveyance of real estate as security for repayment of monies borrowed. Someone lends you money and you pledge your real estate asset to them. If you don't repay the loan, they get ownership of your real estate asset. When you buy property in today's market, you are most likely to borrow with a mortgage. If you're the borrower, you're known as the mortgagor, and your lender is the mortgagee. Business Dictionary Online defines a mortgage as a legal agreement that conveys the conditional right of ownership on an asset or property by its owner, the mortgagor, to a lender, the mortgagee, as security for a loan. The lender's security interest is recorded in the Register of Title Documents as public information and is voided when the loan is repaid in full. Let's look a bit more closely. A legal agreement. Property law in England and Wales requires a mortgage to be framed as a deed. What's a deed? It's a written agreement, signed, sealed and delivered. When you borrow as an individual, you sign in your own name, and when you borrow via a company, you attach the company's seal for the deed to be valid. Conditional right of ownership. The mortgagee has a claim on your property only to the extent of their loan. Once you pay their loan back, their claim on your property ends. Security for a loan. The mortgagee wants to feel secure that they will get their money back. They want to lend against an asset that will sell in the market and make their money back if you don't pay them back. Register of Title Documents. In England and Wales, the Land Registry is a public record of owners of land and property, and title in this context means evidence of your right to enjoy the property. Title deeds are documents, they vary in format, that gives evidence of your title to the property. Anyone who consults the Land Registry database will see the name of any mortgagee shown against the title of your property, and then they'll know that you do not yet have full rights to enjoyment of your property. Voided when the loan is repaid in full. Once you have repaid your loan in full, your lender's conditional right of ownership comes to an end, and they must take their name off the Land Registry database entry for your property. Now let's take an example of a £20,000 mortgage from your building society for a 10-year term at a fixed interest rate of 5% per annum. Term means the period of time over which you take the loan, and the mortgagee has conditional right of ownership over your property. In our example, that's 10 years. Fixed interest means the cost of your loan is unchanged for the complete loan term. Variable interest means the cost of your loan may change during the loan term. Percent means for each 100. So in our example, for every £100 you borrow from your building society, you pay £5 interest. And per annum means per year. So in our example, for every £100 you borrow from your building society, you pay £500 interest for every full year you owe your building society until you repay the loan in full. So those are the main definitions you need to grasp before we get into more detail. And in the next video, part 2, what is your mortgage? I look at your interest-only mortgage. And in part 3, what is your mortgage? I show calculations for a repayment mortgage. Thanks for supporting Cash Genie Global, and do join me again.